Hello, good afternoon. Our topic is auditing problems. We will continue our discussion of audit of liabilities. In this particular topic, we will discuss the audit of notes payable. We are now under lecture number 6. So let's proceed immediately to our problem-solving exercises. As I have said, this is about the audit of notes payable. This is the story of Barbara Company. On December 31, 2020, Barbara Company acquired an equipment from Salome Company by issuing a 1,200,000 peso note payable in full on December 31, 2024. It is payable in full after 4 years. The maturity date is December 31, 2024. The issuance of the promissory note is December 31, 2020. Barbara's credit rating permits it to borrow funds from its several lines of credit at 10%. Meaning to say, in this particular problem, the interest rate is not actually given. The 10% that we are presenting here, the 10% given in this problem is about the interest rate prevailing in the market. And this is also the interest rate to be given in case Barbara will borrow money. The equipment is expected to have a 5-year life and a 150,000 pesos salvage value. If you are the auditor of this company, you have to recommend the appropriate amounts which should be presented in the statement of financial position. Again, let me explain the meaning of salvage value. It is also called residual value, meaning to say, if the machine will become fully depreciated, the selling price will be the salvage value. Because as usual, a fully depreciated machine in actual practice can still be used by the company. Although in the books of accounts, the machine is fully depreciated and yet it still can be used. In some instances, if the company will decide to sell the machine after it was fully depreciated, the selling price is otherwise known as salvage value or residual value. That is the meaning of that particular salvage value. We have two questions here. What is the equipment's book value on December 31, 2022? And question number 2, what is the carrying value of the note on December 31, 2022? So in this particular problem, the 1,200,000 peso promissory note is the future value. We have to determine the present value of that promissory note in order to arrive at the value of the equipment. We can only compute for the present value of that promissory note if we know the present value factor. In this particular problem, the present value factor is not given. So if you know how to compute for the present value factor, you can do it using your manual calculator And if you do not know how to compute, you can use the present value factor table. So it is very clear in this problem, we will compute for the present value of the 1,200,000 pesos promissory note in order to arrive at the value of the equipment we are purchasing. So let's proceed to the solution. We will first answer question number 1. What is the equipment's book value on December 31, 2022? So the amount of promissory note as given in the problem is 1,200,000 pesos. The prevailing interest rate in the market is 10%. To compute for the present value factor, just type 1.10 in your manual calculator and then press the divided by sign 2 times and then press the equal sign 4 times because the term of the note is 4 years. So here is the present value factor. The result is 0.68301. That is the present value factor to be multiplied to the amount of promissory note in order for us to arrive at the cost of equipment, which is also the present value of the promissory note. That is 819,612 pesos. And then we will deduct the accumulated depreciation. So we will use this amount, the cost of the equipment of 819,612. We will deduct from this amount the salvage value of 150,000 pesos. What is the logic why the salvage value is being deducted? Because you will gain possible revenue when you sell the machine. That is the logic. If 150,000 pesos estimated salvage value will give benefit to the company, that should be deducted from the cost of the equipment in computing accumulated depreciation. So 819,612 minus salvage value of 150,000 pesos, the depreciable amount of the equipment is 669,612. We will divide this by 5 years because the estimated useful life according to the problem of this equipment is 5 years. So we will again multiply this by 2 years because 2 years have lapsed. The promissory note was issued in 2020 and today is the question is December 31, 2022. So 2 years have lapsed. That is why the computed depreciation is 267,844.8. I will repeat for the computation. 819,612, the cost of the equipment, minus the salvage value of 150,000 pesos. So the answer, the net depreciable amount is 669,612. We will divide that amount with the estimated useful life of 5 years, and then we will multiply this by 2 years. So this is the accumulated depreciation for 2 years, 267,844.8. Therefore, the equipment's net book value on December 31, 2022 is 551,762.2. This is the answer to question number 1 regarding the equipment's book value on December 31, 2022. Let's proceed to question number 2. What is the carrying value of the note on December 31, 2022? So to answer this question, we have to prepare an amortization table. So here are the headings, the date, the discount amortization, and the carrying value of the note. There was a discount because it is the difference between the amount of the promissory note and the present value of the promissory note. On December 31, 2020 is the date of issuance of the promissory note, and we have 4 years to settle this obligation. So at the end of 2020, the carrying value of the note is the present value that we computed using the present value factor, and that is 819,612. So we will compute for the interest. So according to the problem, the interest is 10%. So 10% of 819,612 is 81,961.2. So that amount will be placed in the discount amortization column. We will add this amount to the carrying value of the note. So after adding the carrying value of the note on December 31, 2021 is 901,573.2. So why did we add 81,961.2? Because 819,612 is the present value. We will gradually add the discount amortization in order to arrive at 1,200,000 pesos at the end of a 4-year period. That is the logic why we are adding every year the discount amortization, which is the 10% of the carrying value of the note. So on December 31, 2022, we will again compute for the interest or the discount amortization for the year. That is 901,573.2 multiplied by 10%. That is 90,157.32. Again, we will add this amount to the carrying value of 901,573.2 to arrive at the carrying value of the note at the end of 2022, and that is 991,730.52. And then in 2023, we will again compute for the discount amortization using the interest rate of 10%. So 991,730.52 multiplied by 10%, that is 99,173.05. We will add this amount to the carrying value of the note. So the carrying value at the end of 2023 is 1,090,903.57. At the end of 2024, we will again compute for the discount amortization using the interest rate of 10%. So 10% of 1,090,903.57, the discount amortization at the end of 2024 is 109,096.43. We will add this to the carrying value of the note on December 31, 2023 of 1,090,903.57. So we will arrive at the value of the promissory note of 1,200,000 pesos. So this computation, this table will show to everybody that the amount of 1,200,000 pesos is really the future value of the promissory note that was given in the problem. Let's go back to the question. What is the carrying value of the note on December 31, 2022? So here we can see very clear that the carrying value of the note is 991,730.52 based on our computation. So this is the answer to question number 2, the carrying value of the promissory note at the end of 2022. So what is the journal entry on the date of the acquisition of the equipment? So of course, we will debit equipment. We will use the amount that we computed using the present value factor. So we will debit equipment 819,612 pesos. We will recognize the discount on notes payable. That is the difference between the present value of 819,612 and the amount of promissory note of 1,200,000 pesos. So the discount on notes payable is 380,388 pesos. So we will debit discount on notes payable 380,388 pesos. Of course, we will credit notes payable of 1,200,000 pesos. See, this is the correct journal entry on the date of acquisition of the equipment. So let's now record the amortization of discount on notes payable at the end of 2021. The interest expense is 81,961.20. This is 10% of the present value that we computed. So we debit interest expense 81,961.2 and we will credit discount on notes payable of 81,961.20. So this is to record the amortization of discount on notes payable. So the above adjusting entry should be prepared every end of the year up to the maturity date of December 31, 2024. So the amount will vary based on the table of amortization that we computed. This amount of 81,961.2 pertains to 2021. In 2022, the amount is different based on the amortization table that we prepared. So this is now the presentation of notes payable in the statement of financial position of Barbara Company as of December 31, 2020. We will present the face value of the promissory note of 1,200,000 pesos. We will deduct the discount on notes payable, the amount that we computed in the previous slide, that is 380,388. So the difference is the carrying value of the promissory of the notes payable amounting to 819,612 pesos. So we will emphasize repeatedly that the discount on notes payable is a contra liability account. It is being presented as a deduction from note payable. The discount on notes payable is not supposed to stay there forever. It is subject to amortization contra interest expense. That is why you may notice in the previous slide, we made an adjusting entry debiting interest expense and crediting discount on notes payable. So let's proceed to another problem regarding the audit of notes payable, and this is about the story of Olive Company. Olive Company purchased a machine on December 31, 2020, paying 80,000 pesos down payment and agreeing to pay the balance in 4 equal installments of 60,000 pesos, payable each December 31. Implicit in the purchase price is an assumed interest rate of 12%. What can you notice about the problem? So the cost of the machine again is not given. We will compute for the cost of the machine using the present value factor. So the present value factor again is not given. If you know how to compute using your ordinary calculator, the better. But if you do not know how to compute, you have to use the table pertaining to the present value factor. So if you are the auditor of Olive Company, what would be your recommended amount for the following? You will recommend for the cost of the machine purchase on December 31, 2020. Question number 2, interest expense that should be reported in Olive's income statement for the year ended December 31, 2021. And number 3, carrying value of promissory note on December 31, 2022. So let's proceed to the solution to Olive Company. So we will compute under question number 1, we will compute for the cost of the machine purchase on December 31, 2020, because it is not given in the problem. What has been given is the down payment of 80,000 and the yearly installment of 60,000 for 4 years. So in this case, the present value factor must be more than 1. So if you will use your manual calculator, as I have discussed in our previous lesson, since the interest rate here is 12%, you have to type 1.12. So after typing 1.12 in your calculator, you press divided by symbol 2 times. And then press the equal symbol 4 times, because this is payable in 4 years. So After you press the equal sign, you will press M plus as one of the button, as one of the key button in your keypad. After pressing M plus, you will press GT, and you will arrive at the present value factor of 3.03735. So here is our computation. So the factor to be used in this case is the present value of an ordinary annuity, because the promissory note is to be paid in installments. So using the manual calculator, as I have said, the present value factor is 3.03735. Always remember, if there is installment payment, to compute for the present value, you have to arrive at a present value factor of more than 1. Just compare this present value factor in the previous problem. The present value factor in the previous problem that we use is less than 1, because the future value is given. In this case, the future value is not given. What is given is the installment payment of 60,000 per year. That is why the present value factor must be greater than 1. So in this case, as we computed, it is 3.03735. So the 12% interest mentioned in this problem is called implicit. Implicit means it is understood, implied, or inherent that this is the interest rate prevailing in the market. So the cost of the machine will be computed based on the present value factor plus the down payment of 80,000 pesos. So in the computation, the installment payment will be multiplied by the present value factor, and then we will add the down payment of 80,000 pesos to arrive at the cost of the machine. Let's continue. So this is the annual installment payment as given in the problem. It is 60,000 pesos. We will multiply this by the present value factor that we computed, that is 3.03735. The present value, therefore, of the installment payment is 182,241 pesos. And then we will add the down payment of 80,000 pesos in order to arrive at the cost of the machine. In this case, the cost of the machine is 262,241 pesos. So this is the answer to question number 1. The cost of the machine purchased on December 31, 2022. 262,241. This is now the journal entry on the purchase of the machine. We will debit machinery, the amount that we computed in the previous slide, 262,241 pesos. We will debit discount on notes payable, that is 57,759. I will explain to you later how we arrive at this amount. Of course, we will credit notes payable. 60,000 pesos is the annual installment multiplied by 4 years, the term of the note. Therefore, the notes payable is 250,000 pesos. So we will credit cash because of the down payment of 80,000 pesos. How did we arrive at 57,759? So this is the computation. 240,000 pesos plus 80,000 minus 262,241. The discount on notes payable is 57,759. So this is to record the acquisition of the machine at the end of 2020. Let's proceed to question number 2. Let's compute for the interest expense that should be reported in Olive's income statement for the year ended December 31, 2021. So let's prepare again table in order to arrive at the interest expense being questioned under question number 2. On December 31, 2020, that is the issuance of the promissory note, and we will pay in 4 installments of 60,000 pesos. So at the end of 2020, the carrying value of the note that we computed using the present value factor is 182,241 pesos. And then we have an annual installment payment of 60,000 pesos. So that will be the annual payment. For the discount amortization, we will multiply the carrying value of 182,241 by 12%. So the discount amortization is 21,868.92. So we will place that amount in this column of discount amortization. And then we will get the difference. 60,000 minus 21,868.92. We will deduct the difference from 182,241. So we will deduct the difference to 182 to 41. That is why we arrive at 144,109.92. So in this case, 60,000 pesos minus 21,868.92. So the amount is 38,131.08. We will deduct this amount from 182,241 to arrive at 144,109.92. For December 31, 2022, we will again multiply this amount by 12%. So the discount amortization is 17,293.19. We will deduct this amount from 60,000. Whatever is the difference will also be deducted from 144,109.92. Therefore, the carrying value of the note at the end of 2022 is 101,403.11. For 2023, we will multiply this again by 12%. So the discount amortization is 12,168.37. We will deduct this amount from 60,000. Whatever is the difference will also be deducted from 101,403.11. And that is 53,571.48. We will multiply this again by 12%. Our discount amortization is 6,428.50. We will deduct this from 60,000 And whatever is the difference will be deducted from here. So we have 0 balance of promissory note. So let's go back to the question. What is the interest expense at the end of 2021? So this is the interest expense, 21,868.92. So this is the balance because question number 3 is asking for the carrying value of the promissory note on December 31, 2022, and that is 101,403.11. So the interest expense at the end of 2021, as we computed in the previous slide, is 21,868.92. So the carrying value of the promissory note at the end of 2022, we already computed that also in the previous slide using the table, and that is 101,403.11. So what is the adjusting entry? To recognize interest expense and also the amortization of discount on notes payable on December 31, 2021. We will debit interest expense, the one that we computed, 21,868.92. We will credit discount on notes payable of the same amount. So the same adjusting entry shall be made every end of the year up to December 31, 2024. So the amount will vary. We will use different amounts, the same journal entry but different amount based on the amortization table that we prepared a while ago. So that ends our short lecture this afternoon. So we will continue our discussion next meeting. Thank you and bye-bye.